Hello and welcome to Crypto Weeklies. In this video, we are going to talk about Stellar and its token XLM. None of the content is financial advice. The reason we are talking about XLM today is per the performance barometer on the website cryptoweeklies.com, the link on the bottom of your screen. Stellar and its token XLM has rallied the most over the last 24 hours. You can see there are some cryptos which are rallying, but mostly the gains are saturated in couple of names, whereas half of the cryptos are still not waking up to the pump. Over the last 7 days, the crypto market were in a downturn. Over the last 30 days as well, couple of notable exceptions such as Maker and Kaspa. Over the last 90 days, almost everything is down with respect to the last 90 days price performance. Again, one of the least bleeding is XRP. So let's get started with respect to XLM, which is Stellar's crypto token. How this tokenomics is looking with respect to the market cap based ranking is ranked number 13th. Does have about more than 60% of the total supply, and max supply is in circulation. Again, the exact number is 61.4. So the threshold that we have on the channel is whenever the max supply out of the max supply 60% is in circulation, the impact of token inflation going forward is minimal. Again, not financial advice. So if you look between the price chart and the market cap chart, now essentially same chart, so that means any growth in market cap should from now on theoretically get reflected back in price growth, as long as the tokenomics stays more or less the same. The market cap, the circulating supply based market cap is 8.8 billion. Volume is at around 330 million, so healthy volume to market cap ratio, more than 3.5%. By tokenomics, there are 50 billion tokens, out of which 30 billion are in circulation. So let's focus more on the machine learning side of forecasts. So right now the price is coming in at around 28 cents. The downturn that existed from first week of January, when the price was at around 50 cents, took price to about half of the December high at around 25 cents. The directionality related forecast per the machine learning model is this pink line that says if all things are equal, the likelihood of the direction for XLM's price is high. That means the trend behind the trend is up. If on the other hand the market continues to bleed over the next 3 to 6 months, the support could be between 15 cents and 21 cents. If the bleed lasts more than 3 months, the support could be all the way at around 10 cents, or the theoretical floor per the machine learning based model. On the other hand, if the price goes into the recovery mode and there is a non-euphoria bull case for XLM, the euphoria phase arguably is over for XLM, when especially when the price in October of 2024 grew from less than 10 cents to within a month about a 5x, in less than 6 to 7 weeks, a 5x gain could be called as a euphoria phase for XLM. So if on the other hand the non-euphoria bull case for XLM for the next 6 months per the machine learning model could take the price as high between 28 cents to about $1.19. So still about a 6x from the 25-28 cents level. If we between 5 to 6 cents, that is 6x from the current price. If we take a conservative estimate and take about end of 3 months from here, that would be middle of April, then middle of May, and then middle of June, coming in at around 72 cents. So that is one conservative estimate for XLM. In terms of the analysis for the current regression based valuation for XLM, this is the polynomial regression function, which is in this pink line wrapped around the weekly candles of XLM, helps identify the fair value above which fair value during the bullish phases as well as the bearish phases of the market. In the bearish phases, the fair value goes down with time. In the bullish phases, fair value goes up with time, to help understand where it's a great time to accumulate or get rid of XLM. Again, not financial advice. Particularly during the depths of the bear market, whenever the price is closer to the one standard deviation bottom, applied, or one standard deviation residual applied to the fair value, like it was in December of 2022, or from December 2019 till basically till November 2020, with some fake outs, as well as during November of 2024, the October November, just before the rally, that per this model, that was the best time to get in into the XLM trade. Similarly, the opposite of that is when identifying when XLM is overvalued. Again, you can see the 2 standard deviation residual applied to XLM's price helps identify the 95 percentile bull case, above which the price would have significant resistance. Right now that level is coming in at around $1.07, whereas the non-euphoria bull case is at around 61 cents. So technically, again, the price below 35 cents still represents undervaluation. The fair value is at around 35 cents. So the next target to watch is 35 cents if it manages to go up to that point. If not, the downside for XLM per this model could take price action somewhere to between 20 to 25 cents. These are again as of today. These models get updated every day to incorporate new data, new daily data. Just to understand XLM from the perspective of simple moving average based risk levels, this model identified the peak in December of 2024, when the risk levels identified were at around 100%. Between 95% and 100%, this identifies risk based on how the price is doing with respect to the 20-week simple moving average. Right now the risks are at around 16%, but if they were to go back to this 50-55% level, the price per this model could be between 56 cents and about 60 cents for XLM. The higher end is between 62 cents and about 78 cents per the forward looking guideline per this model. If we look at XLM accumulation based on the DCA model, which arguably does a better job in identifying bottom, helps identification using the same polynomial regression function applied to the price and then color codes based on that. And again, during the bear markets, again, if the hypothesis for accumulation is only to accumulate when the risks are less than 20%, that this model did identify those zones quite well. Right now the risks identified by this model is coming in at around 20-21%, higher end of this risk regimen between 10% and 20%. So the opposite of that is identifying when it's a great time to think about DCing out, or having a sell order. This risk level between 50% and 60% does identify most of the tops in the market. That price action between 53 cents to about 65 cents, that's the eventual peak estimated by this model if XLM were to go back to those kind of risk topping risk pattern. If we were to understand XLM from the time weighted average price perspective to help accumulation in the bear market, again this model did help a great deal to identify what is a value zone during between March 2022, when the price was sub 20 cents, till about November 2024. So about more than 2 years worth of accumulations are identified by this model. Per this model, right now the accumulation risk is at around 43%. As a composite of all the models, to estimate what could be a theoretical ceiling per the risk reward analysis for XLM comes at around, weighted risk comes at around 25%, slightly lower than 25%, at around 24%. The estimated bull run peak with a composite of the regression or a DCA model, SMA model, and the TWAP model helps identify the bull case at around $1.10. That's roughly about 4x from the current price of about 28 cents. And with that, I would like to conclude by saying the following things about XLM. First, the forecast, the one standard deviation bull case the midpoint is at around 72 cents. For XLM, the regression based fair value comes at around 35 cents. One standard deviation residual applied to it comes at around 60 cents. And the two standard deviation was at around $1.10, which is quite confluent with the overall composite forecast based on the 3 risk based model. And hope you enjoyed this video. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.